What's up, Outliers? Happy Friday. Today we have our options trading beginner lab. We look at the basics and get some ideas on what new traders should or shouldn't focus on. And it's designed to try to shorten that old learning curve. The kind of thing that I wish existed when I first started out. And today I want to talk about something that I had a conversation with a few people earlier this week, and I'll give you the cliff notes. I had a couple coaching calls, literally one very recently, where we talked about this same kind of concept, and it's a difficult one. It's a difficult one to get people to adopt and get behind, but it's one of those things that is important enough that even though I know the message doesn't resonate with many, I will continue to say it. And this is with the full self-awareness that if I were to hear this when I started as a teenager, I very likely wouldn't have really understood the idea and probably wouldn't have liked it and disregarded it. That's just me keeping it real. But the way that I look at creating content and sharing information is that I understand that a lot of the stuff that I talk about in the way that I talk about it isn't going to appeal to a lot of people, and that's okay. I am not really built for mass appeal, but I really care a lot about sharing what I consider to be like quality, real information and experience about the markets. And it's because it really is not that talked about. And the incentive structure is very clear. Most content creators, they're incentivized to get as many people as they possibly can into their communities, into their sphere. And again, I don't hate the game, right? Like, it's a business for a lot of them, and I get that. But I'm in a little bit of a fortunate position where this isn't really it's not even like a source of income for me. Everything that I make is reinvested into the community. And I'm really fortunate to be in a spot where I can approach content that way. Because if I needed to make revenue doing this, it would have to look a lot different, unfortunately. So let's think for a minute. You're a brand new trader. There are a million things that you think you need to focus on, and all of them compete. If you've been in the community for a little while, you already know some of the high-level items that you know I'm going to cover. But there's one of them that I want to double-click into because I think it's not fully appreciated for what it is and often overlooked because of that. The first thing I want to do, as always, is literally start with what people say. I went to Reddit and I literally typed in just in the options sub, and I just typed in new trader, and I just flipped through some of them. That's it, new trader, and started clicking a few. I have not gone through these yet. We're literally going to do that together, and we're just going to see what new traders are being told and what's being discussed. Now, I want to be abundantly clear. This is not in any way to shit on this stuff unless it deserves to be shat on. Some of it will, probably, and I will more than happily engage. But it's to look at this from the lens of a new trader and the kind of stuff that they're taught to do. Last week, we did a version of this by reading different articles. And we also know, even from a more reputable source, that there's a lot of bad information in terms of what retail traders and option traders in general should be focusing on. So we're not going to spend a ton of time there. I want to get to the main point in a minute. But let's just see. This says, long in the money calls, best place to start as a new trader. After watching YouTube videos and reading what I can, ready to start with some simple trades, using about 20K of IRA to get started. Seems that long expiration deep in the money calls might be the best place. That out of the monies rarely work. Any advice on the best place to start would be appreciated. Normal. This is completely normal. As far as a place to start, realistically, buying deep in the money, long dated options, that's definitely not the worst because that's effectively synthetic stock. Not the end of the world, but as usual, this trader might start running some in the money calls, and they might make money or they might lose money. And they're not really going to have any idea as to why in either scenario or how to replicate it, most importantly. Keep that in the back of your brain as we go through this. Next one. The real reason most new options traders blow up. Even traders who understand all the technical aspects of options blow up counts. Why? Because the real killer isn't ignorance of how they work. It's psychological detachment from money. I'm not even going to engage with this. This is literally stupid and whatever. Next, this is excellent strategy for small accounts. I don't care about all this stuff. Uses frequently calculating lambda if you buy or sell options. Noting how to calculate lambda is absolutely necessary. Sure. Whatever makes you happy. I absolutely couldn't. I do not think it's absolutely necessary, but fine. Lambda factors delta and IV, mitigating surprise losses from IV crush once you know how to use it. It doesn't do that. And then they go into a 4 times levered ETF. Okay. So you can see, again, I literally just picked a couple that were near the top from here. That's all. But you can see the stuff that we're starting with, which is fucking crazy. If this person, some new viewer or reader, comes across this and they're reading this and they say like, okay, this is exactly what I should do. And then in this case, you don't really have anything to walk away with. Yeah, there's not even really anything in here usable. And then this person's just going to start randomly trading long in the money calls. Let's talk about what ultimately matters. There are a handful of very key muscle movements you need to execute as a trader. And we talked about a lot of them last week. I'm not going to go through them again. I want to highlight one that I consider to be the most important piece of this, and is that of process. Everything that you do as a trader, if you apply the lens of I'm doing this as a process or part of a process, I cannot emphasize how much better off you're going to be in the long run. So let's say that you're trying to find some sort of new strategy. So you're building a strategy. And again, for those that don't know, if you need a place to start on that, you can go on the YouTube channel, my YouTube channel, and literally just type in OSP or the Outlier strategy process. And you'll come across a framework that will help you here. But let's say that you're trying to build a strategy. And if you're a new trader, the way that you do this is you watch a handful of YouTube videos and then you say, I think the best based on the videos and a little bit of reading that I've done is I should buy deep in the money long calls. And again, not the worst. But as we were talking about before, if I start doing deep in the money long calls, and that's going to be my strategy, and I'm poking through and I decide that I'm going to buy 8 different names. And some of them, the worst case scenario is 7 of them work and 1 of them loses. The issue here is this trader now thinks that their edge is here. And as all of you know, the edge is not here. The edge for this person is going to squarely lie out here at the strategy level via something like a strategy outline. This is how you determine what ultimately works. So rather than trying to say to myself, I need to build a deep in the money long call strategy, instead, the question we should focus on is how do I develop a process to create strategies? Because effectively, a big thing that you're going to be doing as a trader is building strategies. And what's going to happen is the first few times that you do this, it's going to be awful. It's going to be really clunky. It's going to be really slow. You're going to have to learn a bunch of shit. You're probably going to have to learn a little bit about coding if you're going to do this seriously. You're going to have to learn how to navigate an Excel sheet or a Google sheet or whatever. There's a lot of base learning that you have to do. But here's the cool part. If you look at that as an investment into a process, then rather than figuring out how to come up with the strategy outline, which again, if you go on the YouTube channel and you just type in trading plan and or strategy outline, you will come across this. And I've already given you a loose starting point on how to create an outline for a strategy. And the framework that I typically use is an executive summary, which is a glorified overview. We have a setup section. We have a management section, an AAR section. And depending on what version of this that you come across, there might be one or two other things that are added or removed, but these are the base ideas on that exist here. So we need to ask ourselves a handful of questions for each of these. In the executive summary, we need to be able to answer things like, what is the profit mechanism and how does this thing work? And this needs to be in like 2 to 3 sentences, no more. This is just an overview. In the setup, this is where we have to define a lot more things. We need to define the profit mechanism, and we need to define, clarify the quantitative and qualitative features. We then need to think of things like the investable universe. What are we going to trade? We need to talk about rough concepts with respect to structure. What kind of things would you use to capture this? We need to talk about things like signals. How do we find it to get in? And then how do we manage it while we're in? So in the setup, there's a lot of stuff that you have to research and you have to ask yourself. But again, the cool part is, if you develop a process like this, then what you're doing becomes way more efficient. The first crack that you take to build your own strategy outline process is going to be awful. It's going to be slow. It's going to be clunky. You're going to have shit in there that doesn't make sense. You're going to be missing stuff that you need, and you're going to iterate on it. And if you think of it as an iterative process that continually gets better, ultimately, you're building the required backend to figure this thing out. Because some people will say, the most important thing is risk management, and that's fine. Risk management is super important. But again, there's no amount of risk management that's going to lead you to be profitable. So yeah, there's a lot of things that you just have to do, and that's one of them. But I definitely would not consider the most important thing, because you need to be able to generate a return. That's one of those like baseline, you got to do it. And if you don't do that, then it's not going to work out for you. But it's a given. You have to do it. Now, in terms of what's most important, how well you can build these systems, these processes with feedback loops, is ultimately what is going to determine whether you succeed or fail, full stop. This is your survival. How well you can look at the broad requirement as a trader and to come up with different systems and processes is literally what will determine your future and what that outcome looks like. You have a lot of things that you need to do as a retail trader. You have a lot of tasks. And this is one of the reasons why a lot of institutional traders don't necessarily go to become some sort of great retail traders. It's actually the opposite. And that's not to talk shit about institutional traders. They're just doing a different thing. But a lot of people think that if it's an institutional player that gets involved in trading and managing their own book, they sometimes grossly overestimate what that person is capable of doing versus what they need to do. So if you think of like retail tasks, and what I want to do is list some of these broad buckets of tasks that you need to do as a retail trader. And then we can talk about subtasks that you need to start thinking about building processes on. And that's literally your homework, is to take this thing that we build together and figure out how you can create some sort of general standardized approach so that you can cycle things more. The annoying reality about trading, and again, this is what people don't tell you, but you need to hear it, is 95% plus of the shit that you look at, the shit that you spend your time on, back testing, analyzing, is not going to do anything for you. The majority of what you look at will be bad, but bad doesn't mean useless. For example, if I spend 15 hours building the infrastructure to test a strategy, I test the best strategy that I could think of. I think I thought of everything. I have everything covered. I have friction added. I have everything. And then I look at my strategy and it fucking sucks. That's not a bad outcome. That's a massively useful outcome because I've built infrastructure. I just got a rep at a process, probably with ideas on how to improve it. I just honed my ability to analyze information. I just saw something that I thought was really, really good that turned out to be really, really bad. That allows me to confront my ego and say, yeah, not everything I'm going to come up with is great. This is not one of them. And most importantly, you're not wasting your time throwing good money after something that sucks. One of the most dangerous things that happens to new traders is they put stuff on that makes money. And that is a really bad false positive. It is a bad false positive feedback loop that they think what they're doing works. And that's bad because then they start scaling up and then that's how they blow up. Notice how that's not about risk management. Part of it is, but really what that is a bad feedback loop. That's just one example. So let's think of what you have to do as a retail trader. The first thing that you have to do is develop foundational knowledge. How do we develop processes, and what kind of processes do we need to develop foundational knowledge? First thing, we need to define a cadence. This cadence is effectively appointments when you're with yourself. When are you going to look at what? The biggest recommendation I can give here is more frequent is better. This is not preference driven. This is early stage and cognitive performance. You can, again, research this on something like SSRN. You are way better off looking at something 4 times in a week at 15 minutes a clip versus once at an hour. More frequent touches are better. So if you're working on a really time-constrained environment, think of that as much as you can. Even if it's lower overall duration, if you can do it more frequently, the better off you are. So you need to develop your cadence. The next thing is you have to figure out what you're researching. This comes by way of building a syllabus. And again, I have resources for you on my website. I've shared tons of different things you can do to get you started on what you should be looking at least as a general idea. The reason why we need to organize around this is because if we just go off and start looking at everything, you're kind of looking at nothing. So, for example, easy starting points here. You need to learn how markets operate. You need to learn about participants. You need to learn about brokers. You need to learn about the securities that exist. One of those, especially for our community, you're going to come across derivatives, which include options, and so on. This first piece is just defining things, but then you need to come up with your actual testing process. So you can change this to be like uptake. This might be something like, first, I'm going to take notes. And for those that don't know, even though it's really old school, handwriting notes is way better for learning than typing notes. Typing notes have a benefit though. Typing notes allow you to reference things. So this is part of like knowing yourself and what you do best with. For me, most of my notes started handwritten, and that helped me, but it was really annoying to look stuff up. Now you're in a better spot because there's literally tablets like the Remarkable tablet. I think that's the brand itself. Not a plug, not sponsored by them. That's the first one that comes to mind, that you can actually write in it, and then it can turn your handwritten stuff into typed notes. You kind of get best of both worlds. But the note-taking process, you need a process to take notes, just like you did in school. You also need a process to quiz yourself. What might this look like? Easy. It's literally never been easier. Each week, you get a quiz. Use AI. You literally tell AI, this last week, I focused on blank, blank, and blank. Give me a 25-question quiz so I can test myself. Take the fucking quiz. Again, school does this for a reason. People don't do it because they're fucking lazy and they think that they're going to make a bunch of money. But this is unbelievably smart, especially if you're doing this by yourself. This is your first official feedback loop. You're effectively saying, this is the shit that I'm learning about and that I thought and I think I've learned. This is me testing that knowledge. How well do I know it? And another quick tip, if you're building yourself your own quiz with AI, it doesn't all have to be multiple choice. You can say, give me 25 questions with 5 extended response, 15 that are multiple choice, some short answer, whatever you want. But it doesn't all have to be one type either. But use the resource. You have to test yourself. Think of anything that you've ever actually had to learn. It's all included tests. If you're in the trades and you're a welder, in order for you to get a job as a welder, you have to get certified. Part of that certification is a fucking test. In order to drive a car, you had to take a test. In order to pass high school, you had to take a bunch of tests. Tests are part of this thing. I would wager the vast majority of traders do not give themselves tests, which is crazy because it's the literal base feedback loop for testing your fundamental knowledge. Okay, next. We have basic foundations here. The next thing that you have to focus on is profit mechanisms and the research. Inside profit mechanism research, there are a lot of sub-requirements. You're going to have to learn how to conduct research. And you might have to go back to your high school notes on any time you tested different kind of experiments, hypothesis testing, and so on. As you go through trying to figure out how to conduct basic research, you're going to have sub things that you're going to have to do. You're going to have to learn how to read papers. You're going to have to learn basic statistical analysis. A lot of this stuff might not occur to you right away, and that's okay, because you're not going to know what you don't know. But again, if you go to some of those videos that I referenced earlier, it will literally give you ideas on most of these. It will give you a starting point on some of these skills that you're going to need to have, bar none. Got to have them. without the ability to conduct basic statistical analysis, this leads to the circumstance where you build something that looks like it performs well, and then you start trading it and it falls on its face. Or this leads to you tested something and you're still not confident in what you tested. Maybe the results look good, but you think that when you go to apply it, it might not look the same, or it might have gaps. That's also very normal. However, if you learn basic statistical analysis, you can do this. Here's the irony. You will find people that literally are in industry and manage other people's money that don't know how to do this shit. And that's not to talk trash about them, but that's to talk about how infrequently this stuff is discussed. I've literally coached individuals that manage other people's money. And I'm not talking like what I do for family. I'm talking millions of dollars, and they don't know how to do this shit. It's because people don't understand how important this is, and there isn't some sort of information source saying like, hey, you have to go do this and this is what it looks like. It's because it's not the fun stuff. And realistically, a lot of those people that manage money, at least when they're starting, they're just doing like index funds and shit like that. They're not really adding a bunch of value, but I digress. You have to learn how to conduct research when you're looking at profit mechanisms. The next thing, you need to create a process to generate ideas. How do you find things that you think might work? How do you find profit mechanisms? Again, you already know one of my initial recommendations for that is to go to SSRN and just conduct a cursory search on the stock market and see what exists current state. By doing that, it gives you a lot of inspiration on tangential things that you might think could be interesting, or other ideas that maybe they're well discussed, but they still work really well. There's a lot of examples of those. But again, if you think of this more so as a process versus I need to find a specific idea, this will allow you to churn through way more ideas. So maybe the first step is to ask AI. Maybe the second step is, well, actually, no, that's maybe your first step is to monitor the market and take notes. Maybe the second thing is to go to SSRN. Maybe the third thing is to ask AI. Maybe the fourth thing is to Google it /YouTube. And if you create a general process that you follow to generate ideas, to run ideas through a cursory test, you're going to be able to cycle through way more ideas. I think the point likely is pretty clear here. The main message is when you are trading, in your job as a retail trader is to understand all of the different things that you need to do and to try to become efficient at them. We've gotten nowhere near strategy development yet. We've gotten nowhere near the risk monitoring aspect of stuff. We've gotten nowhere near the psychological management side of stuff, which is absolutely a thing, AAR process, all that kind of stuff. But if you think of all the major muscle movements that you need to do in order to trade, and then you view those major muscle movements as a series of processes and sub-processes, way more efficient. So before I move into a quick summary of a conversation that I had earlier this week, are there any questions on any of this stuff? Are there elements of this that are unclear? Do you not have guidance on what kind of stuff you might want to start with? Anything like that? Lauren says, I bet a lot of very new traders don't even know what a strategy is. I couldn't agree more. Yeah, I absolutely, I mean, this is a great example right here, actually, right? Like long in the money calls. That's not a strategy, right? Like that's just a specific option that somebody might select, but it's not, it really is anything more than that. All right. So here, next step for this, what I would do is, again, Notepad, Excel, whatever you want, and list out the things that you think you need to do as a trader. And then list the subtasks that live within those overarching tasks. And then in those subtasks, think of how you can create a simple process so that as you iterate, it's efficient and you don't have to waste a bunch of time treating each time you're doing something as this highly novel, highly unique thing, because you don't have to do that. That's the first thing. The second thing is you would absolutely need to think more and prioritize more the feedback loops, especially in the foundation stage. So once you develop, a syllabus for yourself and that kind of stuff, I would make sure that you are really focusing on the quiz side of things. Think of it this way. If you had a class and you had one class that gave you pop quizzes every single time you walked into the class, and you know that the teacher tells you you're going to have a pop quiz every single day that you walk in here, kind of gets rid of the idea of a pop quiz, but they're coming. I had a specific teacher that did that, and I paid way more attention in that class because I didn't want to do shitty on these quizzes. And I knew that there was a fucking pop quiz every single day. Inspect what you expect. This is a forcing function. Kirk says, if you had 10 hours a week to allocate towards this work, how would you approach breaking this down for optimal utility? That's a great question. I would imagine some of it is knowing yourself for sure. This is under the context that I would at least literally try to spread it out so that I'm touching it 7 days a week. That's for sure. And the easiest way that I would think about starting that is either splitting it up so that you have like multiple half-hour blocks each day. So like 2 half-hour blocks each day, and then a couple that can extend a little bit more. Or by doing hour-long blocks that are each day. But a lot of that, when we talk about like learning utility and the uptake, it really is super individual. Because I also know that there are some people that instead of, let's say we had 10 hours, and rather than doing an hour every day and a couple days going a bit longer, they instead want to do, like 3 days of 3 hours each. But that I would consider to be more the exception than the rule, because most people, your attention span starts to get really shitty after like 90 minutes. And even then you're kind of pushing it. So I would start with something like an hour block a day or something, so that you can at least still get to a little bit of a deeper level, but keeping it so that it's fresh enough. The other thing that I would do, especially if the person is learning, at the end of each session, I would bake in a mini quiz. And then at the end of the week, I would bake in a larger quiz based on what was covered for the week. And then each month, I would bake in a comprehensive exam that looked at everything from, the prior month, that kind of stuff, just to continually reaffirm uptake. There's one massive, massive caveat that goes with all of this that is admittedly super dangerous. AI is not always right. So one of the things that I would absolutely do is, as I take a quiz and as I answer the quiz, whenever I get scored by, let's say, ChatGPT, I would take the quiz, my answers, and my score, and I would drop it in another AI tool. Or again, for those that are in the free community, share your quiz in the Discord. It's completely free. Share your quiz in the Discord in your answers, and then ChatGPT's responses to your answers, and see if it measures up. But the reason why I flag that and give you a couple ways to navigate it is because that is a real danger. If you're being taught something that you think is correct, but it isn't, is really damaging. I would wager most of the time AI will be pretty good, especially for simple stuff. But as soon as you start getting into more nuanced, complex things, AI definitely does not perform as well. That's just the reality of it. So just a limitation to keep in mind. I definitely would have a check in place to make sure like what you're getting is accurate. So to summarize that for Kirk, I think it really boils down to understanding what your work cycle is. And the other thing to keep in mind is like different people have different times of day where they enter kind of like that deeper workflow. A lot of times my deeper workflow will be right before the streams and then right after the streams. And other times I'll have like a mid-afternoon surge where I'll just be really into something, my mind will click right, and then I will leverage that session. So part of it is getting a sense of like what you learn well and when. So for example, one of the things that I also know is really interesting is I read before bed pretty much every single night. And I've done this for years now, but I cannot read really heavy math before bed. And I don't know why. I'm sure there's some sort of reason, but I don't know why. It's not that I don't understand it, but it's that I don't remember it as well the next day. But I do find if I'm looking at different general concepts and thought processes, that I retain exceedingly well. And I also notice that I will wake up the next day sometimes with ideas. And again, for those that don't know, that's another subconscious priming. A really good way to learn something well is to give your brain a prompt to work on before you go to sleep. So you literally just say something in your mind like, oh, tonight I want to think about the Black-Scholes-Merton model versus a binomial tree, and just think about how those relate to one another and what the differences might be, that kind of thing. And then just, you'll start the thought process, but then literally as you go to sleep, your brain will keep working on it even subconsciously, which is really, really cool. So another thing you could do to try to leverage at least some of that time. And then the last thing that I would do is make sure that you're maximizing all the micro time. So for example, when you're in the shower, I literally set my phone up on the side of the shower, typically with a podcast or a video that's talking about something I'm interested in, some research question or whatever. The other thing that I used to do when I used to commute, one of my commutes for the Marine Corps was really long. It was like an hour one way. And it's not because traffic was bad. It's just because it was that far. And for that, I would always have podcasts. So there was that entire drive, even though it was an hour and otherwise generally wasted, I would absolutely try to maximize that time as well as much as possible. So same thing with like stretching. A lot of time I'll find time during the day. I'll either go into my little inversion table, hang upside down to try to keep working on this disc. And that's another time that I'll put something on. So the cliff notes for that is do your absolute best to identify micro time and maximize it as much as you can, unless that micro time has a bigger purpose. So one of the things that my wife and I do is we go for walks together. During that, there's no phones. We literally completely disconnect from technology, no phones at all. And we just go for that walk together with Thor. And that's the purpose of that time, is literally just bonding. So it's like those having specific blocks and specific purposes for things, and then finding the areas that you can leverage, but not all of it needs to be leveraged if it's serving another purpose. The reason why I mention that is because when I was going through the learning phase, it was almost toxic, because when I would be sitting in class trying to learn about something else, my brain was working on trading, and I was sitting there in my notes, taking notes on trading. Meanwhile, in the class, they're talking about something completely different. The main classes that I did well with were stuff like stats, things that I thought were directly relatable. Those were easy to focus in, but everything that I thought was kind of wasteful, I really struggled to focus there. And I actually think that's kind of toxic, because getting too myopic, you inadvertently cut out stuff that otherwise might be value add in some way. So yeah, that's my own propensity. I absolutely an obsessive and I can go too far. So again, understanding your own propensity, try to keep it healthy so that it's sustainable. Steve said, your videos got me into the coverage strangle and really liked him as part of my portfolio. Yeah, that's awesome. The fun thing is, before a retail trader even starts bothering with all these processes and all this shit that we're talking about here that can conflate things, it's really cool because something like a coverage strangle is completely designed to take something somebody already does and just improve it a little bit. The trick with the coverage strangle is if people are too gun shy to buy shares, if something's going up really strong, you're going to underperform by a lot. So that's one thing to be really thoughtful of, depending on what you trade and how volatile it is and what its propensity is for like momentum and drift, is to make sure that you have like good protocols on how much you're going to switch between equity and options and when. Because a good example of that, let me close this stuff down and I'll show you really quick. Let's get rid of this and let's grab a coverage strangle log. We'll grab one of these. All right. So let's say that you're trading the coverage strangle in BK, because that is literally what's on my screen now. And we'll go back to August of last year. And let's say that, you know, BK's been going up, it had a good earnings, whatever, and you decide that this is something that you want to try to run a coverage strangle in. Well, if we're selling 46-day options, and let's just say that everything's liquid and you can get good entries and whatnot. And let's say that it doesn't really matter how much money you have. I'll just kind of do, I don't know, figure that out in a second. We'll start with like $25,000, some shit like that. And we're going to say it's 4 25. Underlying is at 194. Expiration is 19 Sep 25. Strike price is the 97.5. Delta is 0.31. You're going to make $1.75. And let's say that you are doing a 2 lot, because that's all you can get on at this size with a $25,000 allocation. So here's your initial trade to start. If instead I'm going to track as well, putting on the same size position, but using the actually, no, I don't even need to do that. That's actually, yeah, it's pretty cool. We can just track it here. So the underlying right now is 194, and we will track that as we go. And let's just fast forward really quick, and we'll go to the end of the month. We'll go to the 29th again. And the underlying now is at like 105 or something like that. Yeah. So the underlying now is at 105. So your 97.5s, those are going to come down for probably like 30 cents, I would guess. And the underlying now is at 105. And so here's the problem. If you're too gun shy to buy shares outright, the underlying here moved 4%. You made 290 bucks. That 290 bucks isn't bad by any stretch, right? Like that's still a pretty good return, and your long-term return on invested capital is over 14%. So that's your annualized. That's not bad. But the problem is, depending on what your position was in shares, so if you had bought $19,500 worth, if those big moves continue and it persists, you'll systemically underperform, which is exactly why if you're trading cash secured puts, the delta band concept is really important to be aware of. And then also having some sort of modality to instinctively switch your mix between short puts and long shares. So in this case, maybe rather than if something is configured and it looks super bullish, rather than just being in all cash secured puts, maybe we only use like 30% in cash secured puts. And then we do like 50 or 60% in equity until it starts to slow down. And then when it starts to slow down, then we can oscillate back and forth, take risk down, and so on and so forth. So the main thing just to pay attention to there is that it's easy to underperform when things are going up. The good part is if things start going down, you'll outperform there. But the main thing we're trying to expose ourselves to is the upside. So I would build more around that. So kind of like a small admin note. Sweet. All right, gang. That's all I got for you guys. Process. That is ultimately what makes money. Be an outlier. See you guys later.